Hello everyone, welcome back to my channel, and in this video I'm going to share with you how much life insurance coverage do you actually need. To start, we need to understand why do we need life insurance in the first place. So life insurance is actually a risk management tool, and it can be used to maintain your standard of living for your loved ones in the event of a catastrophic event. So if you're wondering how you can get covered for life insurance, in Singapore, there's typically two common type of life insurance out there in the market that you can look for. The first one is a term life, and the second one is called a whole life plan. We'll talk about the difference between a whole life and a term life in a separate video. But in this video, I'm going to show you how you can calculate the amount of life insurance coverage that you will possibly need. So there are three general methods that you can use to calculate your life insurance coverage needs. The first one is the rule of thumb, which is 10 times your annual income. It can be your gross income or your net income. That means before or after CPF. That's the first method. The second method is your economic life value. That means how much potential money will you be earning from now until you retire. And then the third method is the expense method. That means you tabulate all the potential expenses that you are having or you might have, and then add them all up. That will be your life insurance coverage. And I'll go through with you each one of them in this video. Do note that all these calculations that we'll be doing is not set in stone. It is up to your own discretion to measure whether or not the amount is suitable for you. Because financial planning is part art and part science, so even though you can do a bit of calculation, because of life's unpredictability, right, it is very difficult for you to pinpoint exactly how much you need. So we're just gonna use an agar amount, Alright, so the first method that I'll be sharing with you guys is the 10 times annual earnings method, which is the rule of thumb. And like the name suggests, basically you just take your annual income and then you multiply it by 10. So if you're earning 50,000 a month, so if you are earning 50,000 a year, then you just multiply that by 10, which is 500,000. So quite straightforward, right? And if you feel that 10 times is not enough, feel free to increase it to like 15 times or 20 times your annual income. And one very important thing to take note of is whether to use your gross income or net income. That means before CPF or after CPF. Obviously, before CPF will give you a higher amount. So if you want to be more prudent, then use your gross income. The second method is called the economic life value method, which is potentially how much you'll be able to earn from now until you retire. So the idea behind this calculation method is the opportunity cost. Because let's say if I'm 30 years old this year, and then potentially I'll be working until 65. If I were to pass on tomorrow, all the earning potential from now until 65 is all gone already. So I will want to take that into consideration and give all these potential earnings to my family members if I were to pass on. So how do we calculate your economic life value? It is quite simple. It's very similar to the first method, which is just multiplying your annual income by the number of years from now until your retirement age. So for example, if I'm 30 years old and I'm earning 50,000 a year and I'm going to retire at age of 65, that's 35 years of working, and I can just multiply 50,000 by 35, which gives me around $1.7 million worth of coverage. And of course, this is just a simple method of calculating, because if you just multiply your annual income by the amount of years that you're going to work, you never really take into consideration the potential in salary increment. What you can do is to use an increment rate, let's say 3%, and then you can increase it by 3% every year. So for example, if this year I'm earning 50,000, next year I will increase it by 3%, and then the next year I'll increase it by another 3%, and so on and so forth until I'm age 65, and then I will add all of the yearly income together to form my coverage amount. You can do this using a calculator, but I think using an Excel spreadsheet will be much easier lah. If you need an Excel spreadsheet formula, just let me know. I'll make one for you and then I'll send it to you. It's really very easy lah. And after you've done all the calculation and add up every year's increment, right, the sum assured will be around $3 million. So you can see that there's quite a big difference between with the adjustment and without the adjustment. So you can use either of the amount lah. So obviously the higher the amount, the more prudent it is. But also know that the more expensive the premium will be lah. So it's about striking a balance between your needs and also your budget. So the third method is the expense method. Basically, what you have to do is to tabulate all of your liabilities, like your mortgage, your car loan, and also how much you want to provide to your family if you were to pass on. For example, let's say if I have a mortgage of $500,000 HDB loan, and also I have a car loan of $100,000, and let's say my wife is not working, she's a housewife, and I would like to give her an allowance of $1,000 a month from now until she passes on. And I also have a kid who is 5 years old, and I would like to provide for him until he's 25 years old, and by giving him $1,000 a month. So I can add up all of these expenses after I do my calculation to come up with my final life insurance coverage amount. So let me just give you a quick, simple breakdown. Firstly, we have the $500,000 mortgage loan. Secondly, we have the $100,000 car loan. And then thirdly, my wife's allowance, which is from, assuming my wife is the same age as me at 30 years old, and also assuming that she'll be living until 85 years old. So including this year, there will be a total of 56 years. And $1,000 times 12 months times 56 years will give me around $670,000. And then lastly, allowance for my son. He's 5 years old now, and I want to provide for him until he's 25 years old. So that's 20 years and at $1,000 a month. So that will be $1,000 times 12 months times 20 years, which will give me around $240,000. So after I add up all of the expenses, that should be roughly how much the life insurance coverage should be lah. However, if you want to take inflation into account, you can always account for inflation by increasing the amount of allowance by, let's say, 3% per year. And all you have to do is just to adjust the allowance portion upwards. So for example, if this year I'm giving my wife $1,000 a month, and then next year I'm going to increase it by 3%, and then the next year I'm going to increase it by another 3%. So after you add on all of the increment and add them together, that will be your total sum law. And the formula goes like this lah. I'll show it to you over here. So it's 500,000 plus 100,000 plus about 1.7 mil plus about 350,000. So the total inflation adjusted amount will be around 2.6 mil lah. So as you can see, there's quite a big difference if you do it with inflation adjusted and without inflation adjusted. So if budget allows, the more prudent amount should be the higher amount lah. Alright, we have come to the end of our video. Just to do a quick recap, there are 3 methods to calculate your life insurance coverage amount. The first one is 10 times your annual income. The second one is your economic life value. And the last one is the expense method. So for economic life value and expense method, you can use a simple calculation by just multiplying the amount by the number of years. Or you can do it with inflation adjustment, which adjusts your allowance upwards by inflation. So all these will give you different amounts of coverage. So it is up to you to decide whether or not your budget allows, and also whether or not the coverage amount is sufficient. Okay, thank you very much for watching till the end. If you've learned something new and you like the content, please give me a thumbs up. It will really help me out. And do subscribe to get more content. Thank you very much. I'll see you next time. Bye bye.